If you're looking for a small cap tech company has delivered almost $50 million in revenue over the last 3 years, is growing, and is now profitable, then meet Kidoz, the global leader in kid-safe mobile advertising. Kidoz isn't just playing the space, they're defining it with nearly 5,000 apps powered by the Kidoz platform and a reach by those apps of over 500 million kids worldwide in over 60 countries. They're building the go-to ad network trusted by the biggest names of business, including brands like Lego, Mattel, and McDonald's. They're certified partner of Apple and Google, and they're fully compliant with digital privacy laws around the world. You're going to understand why that's important when we get into our interview. Uh, Kidoz is a market leader for private in-app gaming media, and the company says it believes our full 2025 results will be another record for the company. What does that mean? Revenues in 2017 were $1.9 million. Revenues last year were $19.2 million. And here we're talking about Q1 of 2025, another record quarter, just under $4 million Canadian. Jason, welcome back, my friend.
Thank you, George. Great to be here.
Before we get to the nitty gritty of the numbers, I want to start with one of your quotes. Kidoz is stronger than ever, and we're thrilled by the results as we continue to deliver on our mission of safe digital advertising at scale across the globe. That sounds like you guys are brimming with confidence. How should your investors feel, and how should new investors be feeling about what you guys are delivering?
Thanks, George. Yeah, I think that really the technology is taking a strong hold, and I'm just incredibly proud. We are a product first company that is based around extremely strong engineering and planning to deliver a technical solution that has become the market leader and is trusted by these incredible brand partners who prioritize compliance with performance. I mean, we don't sacrifice on performance, because actually the successful model for companies moving forward in the in-app space, and even now in some other areas, is to be contextually led and data free of tracking, and we've got the leading system and the leading connection and the leading inventory in the under 13 area, and we continue to show that capability to our partners, and I'm very proud of what we've built and excited for the future.
And a lot of CEOs will use GeorgeCom. We're the leading widget company, because there's just words that people use nowadays. But you're not just saying it. Revenue this quarter, $3.9 million Canadian, $2.7 million US, up 54%. And this is, by the way, for new people, your weakest quarter, because they may say, hold on, they did almost $20 million in revenue last year. Maybe they're on a downslope. But no, Q1 is traditionally slow. You'll talk about that. But what I'm really interested in is, to support that, quote, the Kidoz privacy-first digital advertising platform experienced unprecedented demand from our brand partners in the first quarter of 2025, sending revenue to record first quarter highs. Let's talk about, so we know the number, it's a record. What's accelerating there with these global brands? What's happening there?
Good question. I think really we saw the quarter across a number of great partners really give that boost. So it was nice to see that trust coming in. I think that when it boils down to is increased trust and increased awareness of what our technology can do, and both on the performance side and the compliance side. And so with Kidoz, you're getting the best value, you're getting full safety, no brand risk concerns, no compliance concerns, and you're getting targeted reach within their exact customer base. And when you tick all those boxes, that, to me, that is the full package. And we're not aware of any competitor that can deliver the way we can in the in-app gaming space. And in-app gaming is arguably the most important channel right now. YouTube is a huge and very significant and strategic area, but it it has some weaknesses. It's become so big, it's become algorithmically driven, and so those are some weaknesses and challenges for brands to overcome. And we offer an area where those eyeballs are still available, and in a quantifiable way and reachable at scale, which we're doing. And we operate in full transparency with our partners, both on the technology side and the delivery side, and that has a huge amount of value. And we continue to stand on those pillars, and I think that trust resonates, and then you see it in the numbers.
Does it feel like, because you've had that competitive advantage for a couple of years that we've been talking, and clearly it's shown up year after year, quarter after quarter, you keep setting records. But it feels like from your quote, would it be fair to say, maybe I'm reading into it too much, but it seems like your reputation amongst global brands is maybe really starting to extend now, because it takes time, right? I could have the best, Agoracom could be the best platform for some, but it takes time to bring people on. Do you feel like that's what's happening? Because your quotes seem really strong about that.
Yeah, I 100%. Like it takes time to build not only the relationship, but the quality of the results, and for it to kind of be in front of the people that take the time to look at them and make a decision about where strategically they want to align their marketing. And we've delivered time and time again on solid results on those marketing campaigns. And now, as brands look at ways to be 100% safe, to reach their target market competitively, and to optimize their budgets, and we can offer pretty much all of those pillars, and from a trusted voice that is as huge value for the brands. And really our system, this is a core component of software, and also our strategy is that when you lead with innovation and you continue to invest in innovation and progress technically, then you start to really unlock some interesting areas. And the competition, unless they've been continuously doing that, then they start to be left behind. And really that's, in my opinion, where we're at. And we offer a very unique and totally scalable solution. And that's what the brands want. It's tough to justify inferior products when there's a trusted partner at the table.
And there was a time when you were primarily driven through agencies because you were smaller, and so you use agencies to talk to brands, which is smart, keeps costs down, but not always the most effective because an agency isn't wholly committed to you at the end of the day. But you started going about a year and a half ago. You started talking about how you guys are going to start going direct to some brands, cutting out the middleman, going direct. Are you still doing that? And what kind of feedback are you hearing at the table today that might have been different from a year or year and a half ago?
Yeah, great question. We're over 2 years on that strategy now, and particularly in the US, which is the largest market. And the brand conversations are critical, and those relationships are critical. And so there's always more to be done. But the people and brands that we do work with, they hear us, they're excited about the trust that we bring, they're excited about the compliance that we bring. We work closely with our safe harbor partner, Prevo, who is really great about providing us the value that they need and the stamps of approval. And we specialize in the leading technical system to reach kids directly and compliantly with video and playable ads. And this is what the brands want. They want their message out. And yeah, those direct conversations are critical. Our resellers have done an incredible job in Europe, where we're using them across the board. They want to have those local conversations, and that makes a lot of sense. But we're always listening to our brand partners as well, and what they want.
And I know this is anecdotal, but does it sound like they're more excited? Does it sound like they're really starting to dig in to what they can do with you? I mean, you're hearing the
Yeah.
tone. I know this is anecdotal, but I like to ask. Sometimes, the tone of those conversations that 2 years ago might have been, okay, guys, sit down, let's hear what you have to say. And now it might be, hey, sit down, let's talk. What are
Yeah.
those?
I mean, I think that Kidoz is a technology provider and a service provider, so we're always got our ears open, and we're working to deliver the precise requirements what those brands are looking for. And so, but it's great to know and to prove again and again our capabilities. And I know that we're building long-term relationships, and so it's our job to really deliver. And we put a lot of thought and a lot of time into what it takes to make the best system. And we've developed some incredible new tools that is helping to expand our inventory, helping to offer the most competitive prices, helping to offer the best targeting, and all while, as we get a bit bigger, we're investing more into our privacy and everything that we can do to just stand out as the best and most trusted service. And I really think that is resonating.
One problem with fast growing tech companies is they don't pay attention to the bottom line, especially big NASDAQ companies, big Silicon Valley VC funded companies. You'll see George Com will do $100 million in revenue, but lost $25 million. And they sometimes can do that. They have the luxury because of being on NASDAQ or being VC funded. You don't have that luxury. And what's really great is net income, gross income, EBITDA, free cash flow, all of those increased dramatically this quarter, and it's your second straight profitable quarter. How are you guys able to pull off a record quarter, 54% revenue growth, and pull the bottom line up with you? That's pretty remarkable to me.
Yeah, I mean, it's a challenge, of course. We've invested many years and many millions into the system, and it demands the most talented people to be building it, and across many pillars of the business. So it's a big challenge. I think that obviously the goal of software businesses is to build tools that can generate more revenue than they cost. And so, we're certainly getting closer to that point. I do say also that, the second and potentially third quarters will not be like as strong as this Q1 was in terms of that 54% growth. But what we're doing is we're building a number of different strategies internally to try and combat this cyclical seasonality of the business when we're targeting kids and offering under 13 advertising. So there is this lull period, but what we're doing is super exciting. I mean, if we look at comparables in the market, like one of the key comparables is a company called AppLovin, and AppLovin doesn't operate in the under 13 at all, but they have a mobile advertising system, and they're trading at close to 30 times revenue, I think, because they are really hitting what is required in this market, and this is a hyper growth market. And our system is far different, and we're a much smaller company, but when you get down to the nuts and bolts of it, it's a similar system, and there's lots of opportunity in this area. It just takes innovation and a commitment to developing and providing those unique tools. And we think that we can start to make an impact not only in Q4s and in good Q1s, but also flattening and growing year round.
Yeah, you mentioned quickly there are two disruptors that have been in the global economy, even North America for us, on this call. One is the tariff wars have caused a little bit of uncertainty, so people are, across the board, every industry from surf shops in Daytona Beach to advertising, kind of put the brakes on a little bit. You weren't immune from that. How's Q2 looking for you? And how, and how do you think that impacts Q3 and Q4, or just Q2 where you might have a bit of a so-so quarter and then you expect to be back to normal?
Yeah, I mean, Q2 and Q3 typically are flatter. Sometimes you can get some bumps here and there, but to find consistency in the kids marketing business all 3 months, it can be tricky. And so really what we're doing is of course, retooling as much as possible because we know that that Q4 is the busy time. And we're developing new products that we can bring online in 26. And so really everything we can is always fighting for every dollar to get that growth and have the best results we can. But we do know that it's a downtime. And that's just the nature of the business until the new products and new innovations that we're working on can help us to grow in this mid time of the year. But I will say that we're believe and are enthusiastic about 2025 as a whole. And certainly if things go as we believe, that we're going to have an incredibly strong year.
Yeah, and incredibly strong means maybe another record, but obviously we're way too early.
Sure.
But that $19 million number last year was really awesome.
Yeah.
The other disruptor has been AI. And that's been even potentially existential for some industries. So especially advertising that depends on clicks, and who's the biggest player in the box? That's Google, the behemoth. And if you watch CNBC, if you watch online presentations, many are saying Google's ad business itself is at risk because people are using AI rather than search. But the AI trend actually helps kiddos because you guys don't depend on traditional clicks at all, right? So why don't we explain that to everybody because that is a devil's advocate question. Some people might be saying, oh, Jason, you got a great business, but somehow, some way AI is going to disrupt you and you're going to lose or significantly lose a lot of that business. How's it impacted you guys?
Yeah. So first of all, great question. And second of all, I think that what is interesting is that we're seeing AI mostly disrupt user behavior on the website, in that people are, when they're looking for answers or feedback, then they're not using traditional search, they're using AI tools. Whereas kiddos and the gaming area is an entertainment source. And so entertainment and apps are not subject to disruption by AI tools because they don't replicate entertainment. In fact, gaming and apps are more popular and on a strong real user growth trend that sees no real stop. And so we're an operation tool, a monetization tool within that area. Essentially, we're a giant advertising network that sits within the world's most popular entertainment form, and that entertainment form is built by humans who painstakingly design games that require an intense amount of development and energy that is not, I mean, AIs can build games, but not at the level that humans can at this point.
No.
And either way, they're still going to need monetization tools, and we're a monetization tool. And actually, the way we look at AI is helping us to advance our tools, advance our monetization capabilities, advance the targeting and the app selection that we can offer to our brand partners, and several other operational kind of projects that we have internally. But AI is definitely wind behind us and not in front of us.
Yeah, in fact, I want to quote you where you say, in fact, in-app gaming is an entertainment and media category that is an all-time high in terms of usage and attention from media strategists and planners. So it seems like everyone's running into your world.
Yeah. So I mean, since social took off, that has been like a big area for media strategists and has taken a huge amount of budget for whatever, close to a decade, if not more. And so now, people understand that vertical, and gaming has similar amount of eyeballs to social, but it has been less understood and has not earned its share of media dollars. And it still doesn't, but the growth currently behind the allocation towards gaming as a segment is higher than it's ever been. And so it's starting to kind of really see its day. Most strategists know it's an important category. And so we're starting to see budget allocations increase because it's an area now that is starting to get good attention, that it builds awareness. The media is really strong. It's far less crowded. I mean, when you're looking on the social platforms or on YouTube, it's very crowded. And so there are greener pastures in gaming, and we offer a great and exciting alternative for the brands that want to build awareness within this area. So yeah, that's all true, and I think has many years of potential ahead.
Well, I gotta tell you, I'm seeing it, and I know I'm not your target market, but I've been on a couple of flights. That means I'm on planes. I'm in airport lounges and things like that, and I've never seen more adults. Whereas as you walk by, you can't help but you just see someone's doing this, and they're playing these games on their phone. So I got to figure if the adults are doing it, and you're talking about professionals, right? It's like, to me, it's surprising. But if the professionals are really, if I can see it anecdotally, their usage is going right up. I can only imagine what's going on in your
Yeah,
target market.
no, it's arguably the world's most popular and common form of entertainment, and people enjoy it for challenge, for relaxation, for pastimes. The quality's there, and they like the engagement, and we're seeing that with usage, but also with advertisers who want to get in front of these people, which is possible at scale.
Yeah, and let's face it. You talk about social earlier, and how big of a trend it's been. But social has its issues. A lot of toxicity, a lot of negativity. This political. So people escape into gaming entertainment to get away from all that. It's just George in the game, or little George and the game at the
It's
end of the day, and
true.
you don't got to face the pressures of what everybody's doing and the
It's true.
FOMO and any of that. You're just playing.
It's far more brand safe because the environments are controlled, and which is a great tick box. And secondly, yes, I mean, we all know the negatives that come along with social, and kind of that addictive and those algo funnels that people can go down. And so it's much more of a prescriptive and holistic and enjoyable kind of experience, I believe, gaming, to enjoy a different reality, but in a structured way that doesn't have the pitfalls of algo content.
Yeah, none of the pitfalls. Not
Exactly.
it's just you in the game. Flip side, less exciting to talk about, but a huge impact, which is compliance. So the world of digital advertising continues to get more and more difficult with rules that are increasingly make it harder to target kids. And there's a good reason for that, right? Because you just talked about a second ago, social, the algos have done some terrible things. We've all seen the studies to teenagers and younger kids, right? But you're benefiting from the rising privacy concerns. And a lot of people don't know this, but COPA 2, which is the new law, an updated law from COPA 1. How are these regulations and new rules making you guys even stronger compared to George Com advertising network?
Sure. Yeah. I mean, good question. The new rules came out in April, I believe, and they'll be enforced starting later this month in June. And a couple of key clarities were around mixed traffic. And so mixed traffic, previously an app or site could declare, oh, we've got mixed traffic, so we don't really need to follow the rules because it's mixed. But now there's more clarity around that. Mixed traffic sites and apps are supposed to run age gates, which was a new component piece of tech that should be introduced and will help to bucket traffic. And that benefits us because we love it when apps do this. They're some of the standout examples of compliance. and we hope that all apps follow this rule. But I think what's also important is looking at it from the brand perspective, in that there's more focus on COPA than ever before. There's new regulations are out. Child safety online has never been more of a focal point, and brands need to pay attention to this, and they need to go with the trusted providers, and it doesn't cost them more, it costs them less, but we're the experts and we keep them entirely safe. They can sleep at night knowing that their campaigns are delivered at scale, on target, and zero risk. And so that is what's helping us, I think, the most, and is absolutely true. There's no sales pitch there whatsoever. It's just a fact of the macro environment says you should not break the rules. Here's a solution that gives you value, performance, trust, and doesn't break the rules. So why would you try and pick a different one? And really, that is an ideal scenario, but that's what we have been doing since day one. The mission of this company was, we're going to make the best advertising system that is 100% compliant from the first line of code that we ever wrote. And as far as I know, there is no other system that can operate at scale and offer those advantages. And I hope that all the marketing managers are listening, because really it's a decision that they can make and sleep easy. And that's what I want. I want marketing managers to sleep easy.
And by the way, sleep easy isn't just, oh, I hope George is complying with the rules. I've read off in the past, and I haven't done it in a while, but these rules have teeth. Like, you're talking tens of millions of dollars in fines to major companies for breaking these rules. So, Jason, are these fines getting even heavier? Is the bite even harder? It's not just a case of, George broke the rules, sorry, slap me in the wrist,
True.
I won't do it again. Like, you break the rules, if you're a brand, you get 10, 50, $100 million fine, right?
Yeah, and obviously the monetary fine is heavy and difficult, but the bigger damage is through brand reputation, of course, right? Like,
Right.
these are brands that are worth incredible amounts, built over decades, if not centuries, and so they need to operate in a way that is fully compliant, because that needs to be one of their pillars when we're talking about children. And so, again, having those partnerships, and the fact that we know that at the very bottom of our code is pure compliance, and we're investing in our partnership with our safe harbor partner Privo, and these things really stand out over time. And I think that brands need to pay attention, and but also they're trying to get performance, and we don't sacrifice performance. So there's really no sacrifice, which is a wonderful thing to be at the table with, and show them transparently, this is why you should be making this decision, because we built it for you, and we'd love to be your partner. So that
Well,
makes a
look,
lot of sense.
you're hitting record revenues. You're pulling the bottom line up with it along the way. It's not like you're just giving away money and for growth and you're sacrificing the bottom line. You're not sacrificing quality. You're not sacrificing compliance. You guys are really pulling it off, Jason. And I don't know, this is me speaking anecdotally, but it's going to be fun to watch how you guys grow in the next 12 to 24 months. I'm going to have one last question for you. This is probably going to be the most important question of the whole interview, but you and I are both wearing black t-shirts. Who wore it better?
Yeah, we'll have to see that in the comments, right? I think it's a tie. We both look amazing.
All right. Well, I'm going to lean towards you. You're a little more fit than I am, so I'm going to say you. But it's just funny. We're both doing kind of like the Steve Jobs, not the mock neck, but we're doing the Steve Jobs look.
Yeah, no, it's a new tech CEO look, I think. So we got to go with it.
Jason, thanks for joining us, my friend. Congratulations to you and your incredibly ridiculously talented team and what you guys are able to.
Thank you
I've
so
said it
much.
before. For new people, I'll say it again. I know from a Gorecom side how difficult it is to build a platform, and we got to be compliant because we got public companies. But at the same time, you want to reach and you want to test the boundaries. And it can be tricky, and you guys are blowing our doors off in terms of how you guys are executing. You make Agoracom, I'm not saying this is a joke, you make us want to be a better platform just by watching what you guys are doing. So congrats to you and the team, and I
Thank
can't
you
wait
very
to have you
much.
back on in the future.
Yeah, I look forward to it. Great to see you. Thanks.
To everybody at home, thanks for joining us. Hopefully today you discovered your next great small cap company. It's Kidoz, KDOZ, on the TSX Venture Exchange in Canada. Add it to your watch list. Do a deeper dive. Get to Agoracom. Watch previous interviews. Take a look at the press releases. All the content is great. You still got to make your decision, but 12 months from now, 24 months from now, don't say we didn't tell you so. Thanks for joining us. Have a great day. See you next time.
Hey, small cap fam. I hope you loved this interview because more than a dozen people were involved in its production for the sole purpose of making you happy. If so, can you take a moment to support both our awesome guest company and Agoracom? Your engagement means the world to us. First, if you enjoyed this video, give us a thumbs up by tapping that like button. It's a small gesture that helps this interview reach even more potential investors to discover today's guest. Second, we would love to hear your feedback on this interview, so please leave a comment below. Be sure to keep it clean, but feel free to poke fun at George. If you loved what you heard on today's video and want to dig into our guest company right away, take a look at the links in the description below. And while you're at it, hit that subscribe button and ring the notification bell to never miss another great Agoracom small cap video. Thank you so much. We couldn't do any of this without you. Make sure to come back soon.